Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that no one trade is guaranteed to bring profits, and there's obviously some risk with each and every trade that you take. You can control that risk by managing with stop losses, hedge trades, or use our special feature AvaProtect, which is available on many of our instruments to help you with your risk management side of things. Also keep in mind that what we go over is not meant to be taken as financial advisement, but is coming from an educational perspective. Now, one thing to keep in mind about fundamental analysis, fundamental news, is that there are two main types. One is the fact that there are regularly scheduled economic events that we can account for in terms of the timing and scope of things. But then there's also the other side of the fundamental news situation where we have extraordinary economic events where there are headlines that can hit that are unexpected. You don't know what it'll be or when it will be. And that sort of fundamental news, while on the surface might seem like you can't really prepare for it, you actually can with strategically placed pending orders. Many times you can just wait for breakthrough moves on different price levels that indicate, wow, there must have been really big news. And so sell stop and buy stop pending orders many times can take advantage of those extraordinary type events where you have these big unexpected moves in the market and you can kind of catch the wave, so to speak, by preparing pending orders in strategic locations. We'll go over some ideas with that as we go through the live charts today. If you have any questions, if you want to give any input, please feel free to do so in the chat box to ask questions or give input at any time. Now, real quick, we'll take a look at the headlines and see what's moving the markets today. There's quite a bit of fear that has hit the markets today, similar to the last webinar we did. The same thing was occurring, and it was pretty easy to take advantage of those moves with some of the trades we simulated on my demo account. Now, if we take a look at today's headlines, it's easy to get a feel for what is the sentiment today. Dollar edges higher. They're talking about the US dollar. And that typically happens when there's fear on the markets. The US dollar tends to strengthen against the other major currencies around the world. And so dollar edges higher as policy gap widens. We'll talk about what is that policy gap real quick. And Evergrande fears continue to bubble. Evergrande is an entity in China that's a real estate group that's having some serious financial problems, and there's more bad news, it seems, leaking out about that group, and the fear is that could spread to an economic problem in China that moves beyond just the real estate sector and could affect other areas in China, as this is a very large group with a lot of potential debt problems. And so that's something that's hitting the market with fear today. And when they say policy gap is causing the US dollar to strengthen, that's a separate issue from the China Evergrande issue. And as you go down, you can read that what they're talking about is the US is starting to edge towards a policy of cutting back on their stimulus measures, and other areas like the European Union are still going full bore ahead with their stimulus measures without the talk of reining them in. And so if you know about how these policies affect the strength of the currency in general, if you're cutting back on stimulus measures, that causes the currency to strengthen. And if you are going full ahead with stimulus measures, that tends to have the currency weaken. And so if the US is going to start to pull back on its bond buying program, etc., that will cause a potential strengthening of the U.S. dollar, which it has been. We see that today. And the opposite then for the euro and the pound and other areas around the world, if they're still going full on with their stimulus measures and ultra low interest rates, etc., those currencies then would be comparably weaker than what the US dollar is doing with those types of policies continuing or being accentuated. And so that's what we're seeing with this headline, US dollar edging higher with that policy gap that exists. And what we see here is the US dollar index is up 0.16%. The dollar index is a basket of different currencies paired against the US dollar. So the US dollar is strengthening against those currencies in general. And as we look at the volatility index, which is what we call the fear index, it's up over 7% right now. So definitely there's negative sentiment on the market. US dollar, which is somewhat of a safe haven currency, is strengthening. The fear index is up. And we see the futures are in the red, okay? So futures in the red, that checks one box, yes, negative sentiment. We look at the volatility index way up, that checks a second box, yes, negative sentiment. And the dollar index is up. That's 3 out of 3 for those measures to confirm that, hey, yeah, there's some fear on the market. There's negative sentiment. All right, so then we go to another headline. From a second source, Evergrande Investors. This is that group in China. Evergrande Investors in limbo after payment deadline passes. Folks are not getting paid by this big realty group in China. And so the fear is starting to spread worse. Then we have a separate story out of China. Their central bank continuing to crack down on cryptocurrencies. And so if and when we look at the crypto charts, we're going to see, wow, a big sell-off on cryptos, okay? And those moves are easy to catch. If you've just got the right pending orders waiting, you could be shorting those cryptos right now if you're in an area of the world that allows crypto trading. And boy, you could have a huge payday today on shorting these cryptos. And I'll show you strategically where you could have had some sell stop pending orders just waiting for a crash, waiting for a broken support level, and boom, you're in on these big drops on the crypto. So China really moving the market on cryptocurrencies. It doesn't mean that all the cryptos will continue to crash. There are plenty of areas around the world that are still supporting the crypto industry. So it'll be interesting to see where maybe some of these falling rocks maybe find a bottom and start to bounce back up potentially. Another headline, German millionaires rush assets to Switzerland ahead of election. Boy, negative sentiment after negative sentiment. Now we're talking about, the largest economy or one of the largest economies in the European Union having millionaires rushing assets out of their economy and into Switzerland with fear that the economic policies will be moved further left, maybe meaning higher taxes, etc. So out go the millionaires. And we've seen something similar in the U.S. moving from state to state, not out of the country, but many of the folks who are business owners or have a lot of money, have high incomes, have been leaving New York and leaving California and moving to states like Texas and Florida who have lower tax rates and lower business taxes, etc., personal income taxes lower. And so it looks like some of the same in other areas around the world as well. There are benefits to higher taxes if you're in the lower bracket, but then you don't want to scare away those who bring the money either with too high of taxes. So if the balancing act goes too far one way or the other, you get this sort of thing. And now you see some fear hitting the German market with millionaires apparently rushing assets out of the country. And then we take a look and we say later today, we've got Fed Chair Powell speaking, other members of the FOMC committee talking. When they talk, investors listen. And if they start talking more about cutting back on the bond buying program, cutting back on stimulus measures, boy, we could see a further crash of the markets with that type of talk. It just depends what they have to say, what the response will be. But boy, you can see what the anticipation is with all the fear and the already selling off on the futures market that's occurring. So I think maybe investors have an inkling of what might be said by Powell and the FOMC members further today. And then we've got new home sales coming out as well. If the new home sales miss the mark, that could create some more fear in the markets out of the US. So we'll see. We've already got fear out of China, fear out of Germany, and we'll see what these announcements bring later today. But boy, the potential's there for further fear to hit the markets. Amutha, yes, we can look at the Dow Jones. Absolutely. All right, so I mentioned AvaProtect in the opening as we went over the risk disclaimer there. AvaProtect is a feature that allows you to protect against any and all losses for defined time periods for a small premium cost. So if you're trading on a day like today and you say, listen, I just want to cover my risk for a day or for 2 days, you can do that with AvaProtect. You pay a small premium cost and all the profits are yours if you're right. If the market goes the way you're thinking, let's say you're shorting, I don't know, gold or something today because you think that there's going to be a rapid strengthening of the US dollar with all the fear, and you think gold could crash. Well, you know, if you're wrong, you're only down the premium if gold goes flying the other way, and if it goes the right way, well, you just made a huge profit, right? Potentially. So this is the idea of using AvaProtect, and you can find it on our app. If you go to our trading platforms, go to AvaTrade Go, you can use our app. You see AvaProtect, and you see other features as well that are good. Even if AvaProtect isn't available, if you're trading on a stock or something that doesn't offer AvaProtect, when you're programming your take profit, your stop loss, it's calculating your potential profit, your exposure to your stop loss mark for you based on your trade size and the price you're putting for your stop loss and your take profit. It does those calculations for you in the order window before you buy or sell. So really some nice risk management features in the order window on our app and also on our web trader platform. If you log in here from our main website, you'll be in the web trader platform, which looks like this. And in the order window, you'll see those same features, AvaProtect, trade calculator features as you're setting up your trades, which is really, really helpful for managing your risk. Also, you'll see our premium features through Trading Central offer you technical analysis features, free signals. Market Buzz gives you fundamental news on a lot of the stocks. You'll see the ability in the Market Buzz to pick the instrument you're interested in. Okay, there's Apple, 218 publications recently. And you click on it, you could pull up the article. It takes you to the website, tells you all about whatever it is that you wanted to read about there, doing the fundamental search for you for the information on these different instruments. And so very nice features in the web trader to help you manage your risk, also to help you with your fundamental analysis in terms of finding articles, etc. Now, I'll go ahead and jump on the MT4 platform here, and we'll take a look first at the Dow Jones since that was requested. The Dow Jones is listed as the US 30 on our platform. And so here's the US 30. If we go, let's say 1 hour candles, we see the market has been pushing down. Okay, why? There's fear on the markets. There's been fear on the markets from earlier in the week. Even we see from yesterday moving forward a pushing down of the Dow Jones here. And so as then we look at 4 hour candles, we can start to try and find price levels, 1 day candles. And so I see a resistance level up here on the Dow Jones. We see resistance and dropping, and then it got near this price again and dropped, tested it again and dropped. So we've got a pretty solid resistance level here that I would say what would be required for the movement to break above this resistance would be policy that supports the markets, that gets rid of the current fear. So right now, the current fundamental news situation, we likely will not see this movement, break this resistance, and go up. It would take an unexpected headline for that to happen. Now, what kind of pending order could we prepare in case unexpected news occurs? What if later today the FOMC committee talks and the Fed Chair Powell talks and they say, hey, you know what, we're going to keep the bond buying program. We're going to keep the ultra low interest rates indefinitely. And they say these things that the stock market will love. What if that's what they said unexpectedly? Now, we don't expect that's what they'll say, but what if that's what they said? You don't have to quickly run to your computer and try and place a trade or to your app. You could just simply have a pending order up here right now above this major resistance level, knowing that for it to break that resistance would take pretty big news, and you could program a buy stop that if it breaks above a certain price to buy, right? It can be that simple. Yeah, Matthew, I'm with you. Probably not going to happen. They're not going to say those things, but just in case, right? You could have a buy stop pending order somewhere up here above the resistance so that if it happens, you're in on it, right? Just a just in case trip line in the market placed up here with a buy stop pending order waiting to go, okay? Doesn't cost you anything to put a pending order just in case unexpected news hits. So I can, and by the way, if you had done this with the cryptos, if you had put a sell stop below the support levels, just in case bad news came for the crypto market, you'd be in big money right now. You'd be way in the green on the drop that just occurred today. So it happens, and sometimes it pays off, these pending orders. So buy stop pending order, what price could I put? Maybe 34,860 as an example. Okay, my buy stop price, my stop loss then I would put just back below that broken support, 34,007, something like that. And my take profit up at the next resistance level, up this direction, 35,350 maybe, as an example. So I'm going after 500 points potential profit. I'm risking much less than that, 160 points potential loss. And so there's my buy stop, just waiting for an unexpected headline that causes a market recovery, right? Maybe the US passes their infrastructure deal unexpectedly in the next day or something, and boom, up goes the market. Okay, they are working on an infrastructure deal for like $1 trillion value. So that could cause the US market to go flying up unexpectedly. You never know what that headline might be. So we've got a pending order waiting with limited risk back below what would be the broken resistance level in case it breaks through and then comes back down. You're risking a limited risk. But if it breaks through and keeps rising, like many times that happens with breakthrough moves, you have a much larger potential profit. Okay? Very simple. And if I delete my objects list, you can see the entry point. There's the green line. That's the entry price, the green dotted line. So if the price went up, broke the resistance, hit there, I'm in on a buy. There's my potential profit. Here's my risk, much less. Okay. Now, besides that, you deal with the reality of what exists now, right? Okay. What's the possibility of what exists right now? That the market keeps crashing, right? So I could have two options here if I want to short this. I could short the market right now. Just say, listen, the fear is there now. I'm selling. I'm putting my stop loss above the nearest resistance. Here's my stop loss above that resistance right there. Here's a resistance. This was the old support. You see support, support. It broke the support, came down today, and up. That support became resistance right here. Old support becoming new resistance, confirmed as resistance with the drop. So the technical analysis and the fundamental analysis says sell now. So I'm selling. Market sell. I put my stop loss, limited risk above the first resistance level. And if the market just keeps crashing, easy money, right? Limited risk. The other option with shorting the market right now would be on this instrument would be, instead of doing a market sell right now, if you don't like the price, if you think it'll come up more before it goes down, is to put a pending sell limit, right? I could put a sell limit from up here near this old support. If I think this is the resistance level, I could put a sell limit from up here and see if I can get a better price to sell from, if indeed I'm wanting to short the market with all the fear that we're seeing now. Sometimes when you try and be too perfect, you miss the move. We looked at that last week. I did some examples of shorting gold with a market move and also with a pending order at a better price to sell from. Guess what? The market move profited. The pending order never opened because it just kept dropping. It never pulled back up to a better price. So this is another situation where it could be that example where you're saying, okay, the news, the sentiment is negative. It looks like the market should drop. But if you're trying to be too perfect and say, well, I'll wait until it comes back up to this resistance level, then I'll sell. Well, okay, that's great if that's what happens. But if it just keeps dropping now, then you're going to wish in hindsight that you took a market move, right? So you can do both. You can take a limited size position from the current price if you wanted to short it, and also have a pending order up higher in case the market climbs a bit more before dropping, right? And understand that all of these could be wrong, right? So you want to limit your risk on each move with a stop loss, with AvaProtect, depending what instrument you're trading on, so that you're risking the amount that's acceptable to you per move and going after a nice profit that's worth your time, right? But these moves that we're looking at, they've been working. I mean, look at the demo account balance. We went up from 100,000 to 110 in the past, I don't know, month. So a 10% gain or something like that. And this is with, playing around with moves a lot of times. And I say, this isn't the greatest move, but I'll show you how it works. A lot of times we're simulating things, what not to do. So we've even worked through all of that and managed to have a nice return on the demo account. And so this is the same sort of circumstance where we're looking and we're lining up the technical analysis with the fundamental news and saying this makes sense. Risk-wise, it's limited risk. Potential profit-wise, it's a nice potential profit. Entry point-wise, we're just below a resistance level that was a broken support recently. So everything seems to be on your side fundamentally, technically. That's what you're looking for as a trader. And so you go after the opportunities that make sense to you, and hopefully in the end you win more than you lose, right? That's the idea. Yeah, we can look at the US Tech 100. You're going to see by other name, that's the NASDAQ 100. Okay, US Tech 100, same thing. It's going to look similar. It looks like the same chart. Broken support here, testing the resistance then, and going down. Now we're in between where we're saying, should you short it? Should you wait for it to go up more before you short it, or buy for for that matter if you feel like the market should go back up? I'm not saying you have to short the market, but if let's say you believe the market should drop and you shorted it on the Dow just now with a market move, then maybe you say, okay, then for the not Bitcoin, not yet. Let's look at the NASDAQ. Maybe for this one, you say, okay, I'm going to diversify a little. I want to short this one, but I'm going to short it from a higher price in case the market moves back up before dropping further. And many times you'll see a bounce back up before a further drop. The U.S. market hasn't opened yet. So when the U.S. market opens, maybe that's when a bigger crash comes, when the bigger trade volume hits with the opening of the U.S. market. Many times that can happen. No guarantee, obviously. Now, so if I want a sell limit from up here, then I say, okay, if the market does come back up to this resistance level, which is a similar view that we saw on the other instrument, let's say at 15,250, if the price comes back up there on the NASDAQ, then I'll sell from a better price on this one instead of jumping right in. And then my stop loss might be, 50 points up as an example. And my take profit, 200 points down or 150 points down, whatever makes sense to you, maybe 15,000 even. Oh, I messed something up. Let me look closer at what I did. Sell limit has to sell from a higher price. That's where I messed up. I put the wrong number. I need to go 15,250. I meant to put. Okay. And stop loss then needs to be 300. 15,300. There. Now that one made sense. Okay, so now my pending order is close to hitting. It could hit while we're watching it even, and we're getting a better price than if we did a market sell. And my stop loss is up here. My take profit, let's go to 1 hour candles, is down here at the next major support level. Now I can play with those settings. I can say, you know what, I don't need that much potential profit. I could go to this support level here. Okay, this is an old support where it bounced. It would only have to break one support level here to get to that price. And I'm still looking at about 3 times the potential profit compared to my risk. Okay, so that's a nice setup, technically speaking. And this is close to hitting our entry price on the pending order. If it's going to test this resistance level right up here, we'll see if it opens or not. All right, so there's an example of a market move, and also then being more patient with a pending order on this one. Gold was requested. I think it's a good one to look at. Okay, gold is pushed up, right? On the 5-minute candles, let's go to 1 hour candles. We see gold has risen to a bit of a resistance level right here. Okay, we see on the 1 hour candles resistance, it's testing it again. And if we look over here, there's an old support up here a little bit higher, right? Right there was an old support, 1 hour candles, support, and then look at the momentum it took to break that. Look at the size of these breakthrough candles to break this support level. So it will take the opposite momentum to go back above this price level here. So this is the better resistance level up here compared to this one down here in terms of how the candles look. Took huge momentum to get below this price. Then in reverse, you think it will take that much momentum to go much above that price. So let's say I'm taking a market sell on gold, knowing that, hey, the US dollar is strong today. There's fear, not fear about inflation, which would drive gold up. There's fear about the opposite of inflation. There's fear about stimulus measures being cut back. There's fear about economic troubles in China, the opposite of inflation fear. So inflation fear tends to drive gold up and weaken the USD. Economic fear tends to drive gold down as the US dollar strengthens. So currently, even if you believe gold over the next months will go up, the current environment, at least short term, looks like there's bearish pressure on gold as the US dollar has been strengthening. Okay, now the FOMC committee could come out later today and say the opposite, that could cause inflationary fears to come back if they support extra stimulus measures again, or if the US passes their infrastructure deal. Then you could see gold go flying up as another $1 trillion in USD is promised to be printed with an infrastructure deal potentially. But that hasn't happened yet. Right now, the current environment is strengthening USD and economic fear. So then you might say, okay, I'll sell on gold. I'm going to put my stop loss above this, not this resistance level, which is a less major resistance, but above the next one, which is a support level here that took a lot of momentum to break. So if it tests this little resistance, okay. If it breaks the more major resistance level here, the old support level, and hits the stop loss here, then okay, maybe you say, wow, I was wrong. I give up. I won't take a further loss than that. And then my potential profit is much bigger than what I'm risking, and I don't even have to break the support level down here. Okay, it got all the way down to 1738 here in the past 24 hours. So I could take profit even above that low up here at this support level here. Okay, at the old support here without having to reach the low that it hit in the past 24 hours and still make double the potential profit or more compared to my risk. Much better potential profit than risk. I've got 2 resistance levels helping me out to keep from hitting my stop loss, and I don't even have to break a support level to reach my take profit. And the fundamental news is on my side here. So shorting gold right now seems to make sense in the current market environment. Now, could we be wrong? Of course we could. So we would limit our risk. Or you could, instead of using a stop loss, or in addition to using a stop loss, you could use AvaProtect. Use our web trader to open the trade. Use the AvaTrade Go app to open the trade on gold, and you can protect for a small premium cost against any losses if this goes bad. And if it goes the right way, you could take all the profits yourself, right? So profits you can collect, risk is capped at the premium cost for the defined period of coverage with AvaProtect. Yeah, listen, Ruben, good question. All of the commodities tend to react negatively to a strengthening USD with this kind of market fear. So you could expect oil potentially to drop. You could expect other commodities potentially to drop if the US dollar keeps strengthening, if this market environment continues. The exception with something like oil would be if the fear was because of war in the Middle East, a disruption of oil supply chains. If there was fear about that, then that kind of fear would drive oil price up. But if it's economic fear, fear about slowing economies, fear about economic trouble in that manner, that tends to bring oil down, along with gold and many other commodities. Very good question. So looks like gold is still having trouble trying to break this first resistance level. We'll see. Okay, and then we can look at crude oil and we say, okay, 1 hour candles, we've got resistance here. Okay, resistance, resistance, resistance. We understand why that resistance is there. There's economic fear, fear out of China, fear in the US that they're going to cut their bond buying program back, the stimulus measures that have been helping to prop up the banks and the economy. There are some housing numbers coming out today that if they're negative could cause a further sell-off on the markets, and all of that could be bearish on crude oil if it's bad economic news, right? So, you know, I can short crude oil here for a small risk to get above today's high, right? I can get above today's high, and my potential profit, if the market does sell off when the US market opens later today, my potential profit to say this support level down here is way larger than what I'm risking, okay? I can go into this trade understanding, hey, it only takes a headline in the opposite direction to swing the momentum, and up oil could go. So I'm above the resistance level, short risk to my stop loss. Okay, I understand that could happen. But with the current market environment, if it continues as the US market opens, you could see oil plunge down and test lower price levels. And so you pick a resistance level, or what I should call an old support level that you like in this case. You could say, okay, this one. This is an old resistance level that it recently broke above. So it easily could test that one. And that's a much larger potential profit than what I'm risking just to this support level here, this old resistance level. If I'm in for a longer move, then I could put it down at the next one. Okay, that's up to you as an individual trader. How patient would you be with the drop if it was dropping? If that's what you choose to go after, how big of a potential profit would you want to try and go after, etc. But you can see, even with taking profit before this first support level, you've got a much larger potential profit than risk, and it's in the direction of the current fundamental environment. Okay, so it all seems to make sense. And if we look at these trades that we've opened, you see at first they were bouncing the wrong way. They're all starting to try and go the right direction now. And that's the sentiment that's helping us. The current fear and sentiment on the market, it's helping those get pushed in the right direction. It doesn't mean there won't be a pullback the other way before the US market opens, etc., which could happen. That's why you manage the risk. That's why you have some pending orders maybe to open at a better price in case the market pulls back up, and maybe you're still looking to short it from a better price, etc. Okay, and at the same time, we gave an example of putting a buy stop just in case the market completely reverses with unexpected news, right? You put those buy stops or sell stops in the opposite direction to prepare for the unknown. And here's Bitcoin. Look at the drop. Look at this drop, and it's not just Bitcoin, it's others. You know, how hard would it have been to have below, say, this support level. Okay, support, support. These are 1 hour candles, so this has been here for days, right? Support, 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 support. The market goes up. You see it starting to pull down. You could have said, okay, below this support level, if it breaks this support level, I sell, right? You could have had a pending sell stop. As soon as it broke that support, you'd have been in on a sell from this price, and look at the continued drop, right? That's no small drop from this entry price below the support level to where it is now. That's a significant movement. Okay, if we go to say 15-minute candles, now you see how big that movement was, right? Even if you got in late from this red line, this was the entry price below the support level that was here. Look at the continued drop. We're talking from 43,000 approximately to 42,000 just above. That's almost 1,000 further in dropping, even with a late entry point after the initial drop. And that's the value of getting in strategically after something like this support level broke. Okay, and odds are, after it broke this major support level, it could push down to the next support level down here, sub 40,000 potentially. And as the U.S. market opens again, if this pulls back up and gives you an opportunity for a better price that you like, maybe that's the spot you like to get in. Okay, and it's obviously up to each individual trader what exact price you like and the direction you want to go for that matter. But the fundamental news, when you look at it and you say, I know why the market's dropping. I just saw a headline that China's cracking down even further on the crypto industry, cutting off trading in mainland China, cutting off the banking systems from dealing with cryptos within China. The headline just came out supporting all of that again today. And so this has been the impetus for this big sell-off today. Okay, so as soon as you understand the fundamentals, you can start picking your technical entry points that go with that fundamental news. And in this case, you'd be winning. Yeah, Matthew, if you have your Fibonacci levels on there, you see a pullback right at that level, you could be going the opposite direction to trade those bounces, or just waiting for the bounce then to go in the direction of the fundamental news after it bounces back up. Either way, you can use those price levels to your favor. And if anyone wants to use the Fibonacci levels, it's very simple. You just click here on the draw Fibonacci retracement. Then you pick your high price and your low price that you want to look at. I could pick this price level up here as my upper resistance. I drag the Fibonacci levels down. I could pick this low price, okay, as my support, the level that it reached down here as my low price level, and then let go, okay? And so here's my Fibonacci price levels. If this bounces back up to this Fibonacci level here, that should act as resistance in this case, which is the old support. The Fibonacci levels at the same spot where we drew this red line of support, very close. You see that? So that aligns with our manual support level. The Fibonacci level agrees. And so if this movement bounces back up near this resistance level, this Fibonacci level, that could be where you see a further sell-off after a bounce back up, okay? Now, if you excluded this low point with your Fibonacci level and you used a different price level as your low point, then the levels would be in a different spot, okay? But that's where it's more of an art than a science. As you start to draw the Fibonacci levels using this tool, you have to pick what price levels do I think are more important for the upper level and the lower level, because you have to manually set those. Then the other levels snap into place automatically. Okay, and each of these levels then act as an expected support / resistance level based on Fibonacci levels. Okay, but usually what you'll find if you draw your manual support and resistance levels like we did, the Fibonacci levels tend to agree with those price levels. They're usually very close to what you draw manually. Okay. All right, everybody, I think this is a good place to stop. We've gone over a number of different instrument classes. I think we understand the fundamental news in general today. A lot of negative sentiment, a couple major headlines causing that negative sentiment, and then also some expectations of some further surging later today as the FOMC committee talks and as the US market opens. So get yourself ready, get your pending orders set for prices you prefer in the direction that you prefer, and go after the market moves if they're where you like them now. All right, everybody, you're welcome. Thank you for joining, and we'll be back at it next week. Bye for now. Have a great weekend.